Another week is in the books, and we are getting 2 weeks closer to the end of one of the worst years in the last decade. I'm ready to summarize this week. Let's go! Hi everyone, and welcome back to the channel. I'm Micha Stocks from the channel Stock Talk with Micha Stocks. This is our channel. We're growing. We're already at 875 subscribers, all of them in the last few weeks. And if you're new to the channel, welcome. It would be great if you can hit the subscribe button and then turn the bell to all. By that, you will get every update on any new video. Right now, we're only doing weeklies on this video, but this is going to increase. So turning the bell to all will give you a notification. And as usual, we summarize the week. We start with the major averages. We go through, after the major averages, we go through the indices. We dive into specific stocks, and then we go through our weekly top 10 and get us ready for the week ahead. Let's dive in. First thing on our agenda is the major averages. This is how they ended the week. The NASDAQ, the triple Qs, ended at a minus 2.76. The S&P, which holds underneath 500 of the biggest stocks in the New York Stock Exchange and the NASDAQ, 2.55. Russell, 2.38. And the Dow Jones, 1.91. All of them on the minus, which means we had a red week. When we dive into the US different sectors, which is called the indices, we can see that the only sector that finished the week in the green is the energy sector, up 2.2%. All the rest still underwater, and you can see the worst performer this week is a consumer discretionary sector, which the two biggest companies underneath is Amazon and Tesla, and we will talk about their performance in a second. This is how the heat map looks like. By the way, I'm using TradingView to look at the heat maps, and I've used Bespoke earlier to look at the different indices. You can see that it's red across the board, except a few, very small amount of companies that ended in the green, but most of the big companies, you can see Microsoft ended almost unch, Google minus 3.74, Apple losing 5.5% of its value, Amazon, and of course Tesla losing 13.5%. We're going to talk about Tesla. Maybe yes, maybe no, in our top 10. I'll give you a hint. We will. When we look at the 17 weekly top stocks that you guys have requested, and of course, we might refresh this list at the beginning of the year, we can see that the best performer is actually SoFi. Her CEO bought a few millions of stocks during this week. Then Meta, the XLE, which we talked about, and SolarEdge. And beyond that, all the others are in the red. You can see leading the pack from the red perspective is Tesla. Are you ready to start our weekly summary? And this is our top 10, starting with number 10. And our number 10 this week is no other than China. Sofia Huerta Acosta, with her usual Friday thread calling all this happened in China in the last 10 in the last week. Thread of 1 out of 10. And of course, let it rip. China reopens, and when they reopen, and a lot of Chinese haven't gotten the vaccine, guess what happens? More and more people are getting COVID. And as you can see, COVID runs wild in Beijing. There's panic buying, hospital staff shortages, long lines of medicine. If you have been frequently watching the weekly, we talked about it. We anticipated it's going to happen. And guess what? It happened. This leads Shanghai to close their school as of Monday, in the next tomorrow, when you'll see this video, or the day after, which means that Shanghai is going back to, it's not a lockdown, it's something else. But COVID is running wild in China. And when you look at the Chinese stocks in the last 5 days, you can see that the worst performer was NIO, then Baidu, XPV, Baba, Li Auto, KWeb, P. Diddy, and JD.com. None of them were green this week. And they're starting to correct after they had a huge run up in the last few weeks. That's number 10 on our list. Let's dive into number 9. And on number 9, we have no other but Sam Bankman-Fried being arrested at the beginning of the week. Funny thing is that a day after he was arrested, he was supposed to be on a Zoom call with the House Committee of Finance. We're going to talk about that in a second. He was arrested a few hours before that. Was someone afraid, or it was just a coincidence? I don't really believe in coincidences, but again, nothing that you see here is any financial advice or any advice. It's only my opinion on the video. And I want to thank Genevieve Roch-Decter, which provides a lot of information, and she follows this on a daily basis. These are the charges that he's going to be charged on: fraud, wire fraud conspiracy, security fraud conspiracy, and money laundering. When you combine all these together, it's over 100 years in prison. If he'll get there, if he'll survive there. Right now, he's being held in a Bohemian jail with other inmates as well. Let's see how that survives. On the other side, the one that blew this whole case was CZ, the founder and CEO of Binance. Here he's smiling. I'm not so sure he's smiling because in the last week there's been a lot of withdrawals from the Binance platform because people are starting to doubt whether they have enough money or are they commingling funds between their customer funds and their investments. CZ keeps on saying that there's no funny or monkey business behind the scenes, but no one has any trust in anything. And to top it off, there's also the famous FTX spokesman, Kevin O'Leary, which comes on the CNBC Squawk Box on Friday and tries to explain how he changed his mind up until 2018, saying crypto and Bitcoin is trash. And after getting $15 million from FTX, $15 million to be their spokesman, suddenly Bitcoin and crypto is okay. And he's really getting a lot of the heat, which he likes because it's publicity, but it's still a lot of heat. And I think his name is being really trashed right now for good reasons. At least that's how it seems. And this is John Ray. John Ray is right now the formal FTX CEO. He replaced Sam Bankman-Fried. He was the formal CEO of Enron after Enron, of course, with everything that happened there. So he's right now, and this is pictures or actually videos from this week when he's speaking in front of the House Financial Services Committee. And if you want to take just one quote out of it, he says, look, FTX is no other than an old-fashioned embezzlement. You can call it crypto, you can call it something else. He opens up a lot of can worms there, and he might get to a lot of names at the end of the day, which I think it would be very, very interesting to follow. All the crypto market, any platform that's engaged in it, whether it's Coinbase, whether it's Robinhood, whether it's all the others, everything is under scrutiny right now, and that's why there's a lot of heat on that industry as we speak. Number 8, we have Moderna and Merck. Moderna, as of this week, actually last week, proved that they have produced a cancer vaccine that can reduce by 44% melanoma for coming back to melanoma patients. And Merck is the one that is distributing that. They have a combination between them where the proceeds are split 50-50. This really helped Moderna stock. The last week went up almost 13% versus Merck that didn't really move the needle yet. So very good news for Moderna for their mRNA platform. And Merck just gets another drug that they can sell to their doctors and through their pipeline. That brings us to number 7. Number 7 this week is companies that are drawn from the public markets. The first one is Weber, which had around 30% short interest, is being taken private again by BDT. Just a reminder, Weber went public about a year and a half ago at $10 per share. It's taken private at $8.05 per share, which means that companies have gone public at a very, very high valuation that we can't really get at 2020 or 2023. But the biggest story, or the bigger story that has a lot of ramification, is actually Thoma Bravo wins a battle for Coupa software. Now, it doesn't matter if you use Coupa software or you don't. The whole idea behind, or the whole interesting thought here, is that even in a market that's considered expensive, big funds are actually paying a premium to buying or taking companies off the public markets. And the interesting thing is Coupa software, of course, went up 62% in the last month because it was trading around $45 when the news started hitting, or actually the rumors started hitting. But the big question is Coupa, which is down here, which is difficult to see, 8 times EV over the next 12 months revenue, their enterprise value over the next 12 months revenue, is it the first canary in the coal mine, or is it the last? Most of the people I'm talking to believe this is just the beginning, because when a private firm takes you private, they can now create a lot of pressure on the CEO and on the management of the company to reduce their staff, and by that improve the bottom line. And in the public market, it's a lot more complicated. So is Coupa just the beginning? We might see in the next few weeks. That's why it was number 7. Number 6 on our list, Netflix. Netflix, which started the ad-supported tier, a low-cost tier, in order to prevent the password sharing, in order to provide a more affordable solution, is hearing a lot of problems. Not a lot of people have joined them, and advertisers are calling them back saying we're not getting our money's worth. And Netflix, at least from Tim Peterson from DigiDay, which broke the story, Netflix is now returning money back to their publishers. And that created a lot of tension on Netflix stocks, which in the last 5 days went down 9%. That brings us to number 5. Number 5 is no other than Elon Musk, Twitter, Tesla. Elon Musk, Twitter, Tesla during the last week sold over 21, almost 22 million shares worth over 3.58, actually around $3.8 billion from his Tesla stock. And from the beginning of the year, he sold around $40 billion of stock, whether it's because he identified the peak, whether it's because he needed to pay taxes, whether it's because of the both or others. Doesn't really matter. If you don't like what Elon Musk is doing, you probably think that he's diluting the value of Tesla. If you do like what Elon Musk is doing, you'll probably protect him. So it really depends on which side you are. But the evidence is that he sold almost 22 million shares. This is his SEC filing, of course. And that, before the good news, that's creating a lot of tension on Tesla stockholder. We're going to talk about that in a second. But good news is Tesla plans in the next few days to announce a new factory, a new gigafactory in Mexico. There were talks about Canada, Quebec, and other places. Apparently, Mexico is going to be the chosen one. And at least from a distance perspective, it's a few hours drive from Giga Texas, which enables a lot of cooperation between the two gigafactories. And if we're talking about Giga Texas, congrats to the Tesla team. This week they hit a 3K per week production milestone. I was there 2 months ago and they were at 1K, which means that they're tripling their pace. Hopefully that will keep on going. And now let's go back to the troubles. So troubles keep on going. And of course, the Tesla community there's a lot of debate there, whether the board is MIA, Elon Musk should or should not sell, or anything like that. And more noise is arised from people that are shorting the stock. The leading one that is shorting right now the stock is none else than Danny Moses from Moses Ventures, which was a partner of Michael Burry in The Big Short. Yes, he knows when to short the top, or at least that's the history. He tried shorting Tesla stock in the past. It didn't go well. Right now, it seems like it's going very well because from the beginning of the year, Tesla stock is down over 50%. And actually, I had the opportunity of meeting Danny Moses yesterday. I was sitting front row in front of Danny. This is my true picture when two very good podcasts came together for a special event, The Compound and Friends, and On the Tape. Danny Moses here on the right for 5 minutes explain why he's shorting Tesla stock. They probably will publish this this discussion, so I'm not going to take their thunder from them. But it's very interesting to hear the way he sees Tesla valuations, everything that's going on from his perspective. It's interesting. I'll wait for them to publish then, and if not, I might publish on my channel. So yeah, people are shorting Tesla and making a lot of money because of that. That brings us to number 4. Number 4 is TikTok in the US. Will it be banned or no? More and more states are banning at least their public phones from installing TikTok. Whether it will go widespread, whether the US will ban TikTok, it's not clear right now. What it did do is get Meta stock up 3.8% versus Snap stock going down 10%. Now, there are two other critical pieces here. Meta got an upgrade and Snap got a downgrade. But at the end of the day, if TikTok would be banned in the US, these two stock would skyrocket. Will it be banned or not? We will probably see in the next weekly recaps. Let's go directly to number 3. On our number 3, we have the US initial jobless claims. Why am I showing the initial jobless claims when it came actually softer than expected? 211K versus 232. For the last few months, Jerome Powell and the whole FOMC are very focused on unemployment. They want to make sure that the balance between open positions and people that are looking for jobs is getting to a balanced position, because right now there's unbalance. And there's been a lot of talk around that. As you can see, even Goldman Sachs, let Jonathan Ferru actually provide us with the news.
Goldman Sachs planning to lay off up to 4,000 people. Shinali Basak's jumped on the phone for.
So even Goldman Sachs is letting go of 4,000 people, which is around 8% of their workforce. And we can see more and more companies laying off people. But on the other hand, when we look at St. Louis Fed data, we can't see the unemployment going up. As you can see, unemployment is ticking up, but really slowly, from 3.5 in September to 3.7. We also know that more than 150,000 employees got laid off in tech in 2022. So we do see a lot of layoffs by thousands, but we don't see the metrics line up. And during the last 48 hours, maybe we have the reason for that. So, Philadelphia Fed just published their early benchmark revision of state payroll employment. Unfortunately, or evidently, because this was a midterm year, it was important to show that there are a lot of jobs being created. Over 1.1 million jobs created. At least that was what was presented. But when you start counting the jobs, apparently in aggregate, only 10,500 net new jobs were added during 2022, which means we are a lot closer to a recession than anyone wants to admit, and there's a lot less open jobs than the Fed wants to admit. Is that another indication that the Fed is looking at the wrong data and might not go as high as they want on the rate hikes? Let's see in the top 10 if we're going to talk about those rate hikes. So that's a very important piece of information. It just broke in the last 48 hours. We're going to keep following it because this is going to be a whole earthquake of its own in the next week, I assume. This brings us to number 2. Number 2, Tuesday, CPI data broke, and CPI for November 2022 was published 8:30 a.m. Eastern. Remember that time, 8:30 a.m. Eastern. Came down to 0.1 increase. And we keep going down on the inflation, which means that, at least from the data that we know, inflation might have peaked. So there's a lot of information here. In the table, you can follow each of the categories where the slowness came down on the increase of price. At the end of the day, we are still above 7% in inflation. Jumping back to January this year, we were all shocked that CPI came above 7%. Reminder, that actually started the drop in the S&P. And now, 12 months later, we're excited that it came 7.1. But that's not the big story. The big story actually lays behind this chart. You can see here, I marked this candle. This is a Japanese candle chart, which shows, you know what, let's take it to a 1 minute candle chart. Let's see, no, this is Friday. I need to go back to, just a second, let's go back to Tuesday. I'm doing this on the fly, as you all can see. Let's go back to Tuesday. What we're seeing right now is the S&P futures. Okay, it's marked as ES1 exclamation. Let's go back to Tuesday. Just running back, probably an easier way to do that, but we're gonna do that on the fly. Just a second. Let's see where that Tuesday is. Here it is. What I want to show you is something very, very interesting. Let's go back to the report. 8:30 Eastern, right? That's when it's published. No one's supposed to know anything before that. Look what happens 8:29 a.m. A minute before, we can see this huge candle of people buying. Then 8:30 goes all the way up the S&P to 41.79, and then it starts dropping. This minute before has gotten all the way to the White House, where Karine Jean-Pierre, which is the spokesman of the White House, was asked, how did that happen? Did someone know beforehand? Because if someone knew, they got the exposure a minute before. Now, the charts don't lie. And I'm not saying that Karine Jean-Pierre lies, not at all. I'm just saying that unless someone took a very, very, very hefty bet, let's see what Anne-Marie Horton here, everyone sees the same charts. It's not clear. So CPI apparently was released at 8:30, but someone got it at 8:29. And that's why it's number 2. Let's go directly to number 1. And on number 1 this week, we have no other than the Federal Reserve press release. The Federal Reserve on Thursday, 2 p.m. Eastern, increased the rates again by another 50 basis points to 4.25% to 4.5%. And that, again, is a very, very large increase. Everyone thinks now that 50 basis points is something that is low. Actually, when they started going up in 25 basis points, it seemed crazy. Now, 75 basis points is the norm. And when they go 50 basis points, it seems like it's calm. So this is Jerome Powell. He wants to talk to the regular, any civilian that understands that inflation is going wild. And he's trying to reduce it. When all the Fed members sat down in those 2 days, Tuesday and Wednesday, they needed to mark, and you can see this is called the dot plot from the Fed release. They need to mark where or what would be the rate. So 2022 is basically done. The next meeting is going to be February, so the next rate hike might be February. For 2023, the Fed members are projecting above 5% terminal rate, which means that we have another between 50 to 75 basis points. When you calculate everything together, inflation dropping faster than expected, jobs might be in a worse position than everyone is projecting, but everyone is unanimous thinking we're going above 5%, something might break, or maybe something has already broken and the Fed is missing. We will see it in the next few days, in the next few actually weeks or months, because if that's the case, we might not even get to 5, or even if we'll get to 5, we'll drop very fast. And the Fed right now unanimously is not even talking about it or thinking about it. Now, this is my opinion. Everyone has their own opinion. If you follow the Fed, we're going to be at the end of 2023 at a terminal rate of above 5%. I'm not sure we're going to be there more than, if we will, more than a few weeks, but that's my personal opinion. And that is how the Fed sees the situation. The Fed wants unemployment to go up. At least 4.6%, if not 5%. Now, this table was drawn by Victor Jones from Tasty Trades, and you can see all the different projections of the Fed. The Fed believes that we won't see any GDP growth in 2023, and only in 2024 we'll start seeing GDP growth. He wants unemployment to go a lot higher than it is today, and of course inflation dropping. But during the last 48 hours, there might be a lot of updates on this chart, which might create a lot of changes. And that was the weekly recap. Let's talk about next week. Next week, actually the next 2 weeks, are more of a window dressing rather than trading, because most of the trades have been done. Right now, everyone's trying to prove that they were a bit better than the worst year in the last decade, which means that less volatility, more trying to fix the numbers. When we look at companies that are reporting, we have General Mills on Tuesday, we have Nike, FedEx, and of course I'm talking about the big known ones on Tuesday. Wednesday, we will see Carnival Cruise and Micron. And basically, we're ending this earnings season. And guess what? In 3 weeks, we're going to start having the banks reporting again. When we look at the financial calendar, we have a lot of housing-related reports on Tuesdays and Wednesday. We have continuous jobless claims on Thursday and Friday. We are probably going to get the PCE price index. And now when we look at the chart of the S&P 500, which is the most traded average because it contains the 500 biggest companies in the world, we can see we are still in a downtrend from January all the way down. We've been following this trend line. We've been following the higher lows the lower highs, that we keep getting. As of Tuesday, when we got the inflation report and we saw the uptick a few minutes before, we dropped for the last 4 days, which was a huge drop. If I try to measure it, the drop from peak to trough was 7.2% in a 4-day basis. This usually creates the condition for a ricochet, usually creates the oversold condition, and also we've just closed the gap that we have. A gap is the high of the day before versus the low of the day after. You can see that we had a gap here. 80% of the time, gaps are filled, and 80% of the time after they're filled, they're turning. Anyone that is seeing this video and understands a bit of candlestick, this is usually a pattern that shows a pivot point or a reversal, which might bring us back to test whether it's the resistance around 3,900 or even a bit higher, depending on the bulls this week around 4,000. So these are kind of the levels to watch. And we're getting very close to the end of the year, where everyone projects that the first quarter is going to be very, very, very volatile with a lot of downward pressure. But when everyone thinks the same thing, history shows that we might get a surprise. Whether the surprise would be that it would happen earlier, won't happen, or will go up, we'll be here to cover it. So thanks again for joining our weekly recap. If you enjoyed what you saw, it would be great if you can smash that like button so the YouTube's algorithm can expose this video to more and more people. Till next week, or the next video that I might post. Thank you.